a nice order from the DAX this morning, so that's a good start to the day. And we also woke up to wins in the Euro NZD and the USD Yen. Good afternoon, ladies and gentlemen, and welcome one and all to today's Markets Now session on the 26th of June. Hope you're doing well, team. Ready and raring to go for today's trading session. It's been relatively uneventful, actually, today, I would say. We did this morning tee up some opportunity in the DAX, which was pretty decent. It was all right from this morning's European breakout. A little bit inconsistent with the ups and downs, but we did manage to pull in a nice order from the DAX this morning, so that's a good start to the day. And we also woke up to wins in the Euro NZD and the USD Yen. Good afternoon to you, Scotty D. Great to see you. Good afternoon to you, James. Good evening to you, Matthew. Yeah, good to see you guys. Sure, we got Jack in the room as well. Hey, Jack. So yeah, it's been pretty good. Look, it's been uneventful today, but the opportunities that we've seen over the course of the week have been all right. Yesterday's US session, I was actually really busy yesterday afternoon, so it was a busy trading session, and it was also a admin day for me as well as this morning as well, which is why I've been a bit quiet. I noticed it was like a tumbleweed in the trading room yesterday. Honestly, it was terrible. Okay, it was really, really terrible. And it's interesting, actually, because over the course of the week, some of our best trades have been coming from the alt asset classes and not the indices. So FX, for example, has done actually really well this week. I've been having more luck in the European sessions than the US sessions. And, I mean, we haven't got much out of energy markets or metal markets at the moment. But I took that was the same as me. Yeah, that's right. Scotty D, just for everyone else who's getting this on catch up, says that he took a loss yesterday and then just gave up. And that was exactly the same as me. I didn't incur many losses. I just took a loss in the Dow Jones and got tired. I think actually, hang on a minute. Actually, I need to confirm that. I think I might have taken two actually. I think I got the NAS 100. Give me a second, just checking the track. I think I took a loss in the NAS 100 and a loss in the Dow Jones and then called it quits after that. But I did monitor the price action. That's the thing. I did monitor the price action. I just wasn't seeing the opportunities. I couldn't get a line on anything yesterday. I just wasn't feeling it. Yesterday, yeah, that's right. Yeah, I took two losses. I took a buy in the US 30 Dow Jones at 232, and I also took a sell in the NAS 100 at 252. Trying to get down on the other side, and took hits on both. So I was a 0.5% drawdown yesterday for our US afternoon, and then of course overnight our USD Yen, Euro NZD both dropped in the bag for a 0.6 and a 0.61. And then also this morning's German 40 buy, which was posted out as always into the room, also yielded a 0.59. Now I was actually a little bit naughty, as I did allude to this. I said, owned up to it, took accountability, but I was a bit naughty and took the trade prior to the bell, and I did trade the pre-market. Look, back in the day we used to love trading pre-market setups, right? I mean, pre-market is not breaking any rules. It's just generally speaking, I tend not to do it. But I did end up pre-market trading this morning, and that's because I had the school run. So I had to drop the kids off and wanted to get in on something prior to that taking place. So I took the order, and that one was really good. Broke out long, hit TP in the first couple of minutes. Really good result there in the DAX. We also, on reflection of that as well, if we just scan the DAX quickly. I believe if you had waited until after the open, there was a straight up win there as well. So the trade I took was between here and here, right? And this is the exact trade. Obviously, the chart's been cleared down now, but that was something like the breaker structure, something like that. And the exact same trade idea was here, right? So if you were trading to the previous high there, then you would have had the exact same trade, and that's after the open, right? So we had the continuation down here, broke underneath, broke back above. As soon as we broke structure yet again, it went straight to TP. So you could have had the exact same trade idea there. That's what I was saying in the room earlier as well. It was trend continuation as well. Obviously, you know, I say trend incredibly loosely here, guys. This is a 1 minute channel. But it did continue to trade higher. We did get a continuation of high lows, high highs being formed all the way up there, which is pretty decent. And it did end up topping out at around midday, or what is it, 20 past 11, quarter past 11ish. And it's now selling off at this time. In terms of the econ calendar, this afternoon, of course, we are on Thursday. We have US durable goods orders, 16.4%, which is a whopping increase over the minus 6.6% from last time. That's really, really bullish. I'm actually surprised if the dollar hasn't actually had a bit of a jump up from that one. Let's have a quick look here. Okay, yeah, I beg your pardon. It actually has had a little tiny jump up here. Very, very tiny. So, honestly, it looks relatively unaffected, frankly. I mean, we might see some fallout for this one. We've got a really, really little gap in the DAX, in the DXY, sorry, as well. We had the close here, and we had the open of the market here. We did have a little bit of an attempt there to fill the gap. It failed. I wouldn't be surprised if at the end of the day the DXY is trading back at 97.70. But yeah, I think this DAX, it was all right. We had Powell and Trump both speaking at the same time after the open, and it just looked messy price action. Yes, that's right, Scotty D. We did indeed. Yeah, I hope you guys remembered to plug in some of your orders after the event took place as well. Yeah, after the Fed Chair Powell event, obviously the USD Yen was the only one. I punched them all in after the fact, but the USD Swiss and CAD obviously were nowhere near. So that brings me on actually to the next point here. Housekeeping. We did have a good number of trades yesterday, but most of them aren't going to be triggering anytime soon. So first thing we need to do is go through and clear out any trades that are just left in the market. We don't want to have money sat in the market if it's not working for us, right? So the USD Swiss is the first one. We want to remove that one. So we're going to remove simply because it's nowhere near going to be triggering. And we're on a Thursday afternoon. We've got 2 trading sessions left. We're not going to see that come all the way back up and then, you know, including a TP. So we're going to remove USD Swiss. Same applies for the USD CAD as well. We had the break, close and retest opportunity up here following Powell's testimony yesterday. Nowhere near. Price action's dumped all the way down, 136.80 at the moment. There's no chance in hell that's going to be trading up to 37.76 before the end of the week. So we're going to remove that one as well. NZD-JPY. This is what happened to that one. This was the loss that we incurred in amongst the FX wins that were posted out this morning. I mean, it's a bit of a shame. I still like the trade idea. I still think it's really, really quite a good one. But look, it broke the structure. It came right the way back up. It didn't last for very long before it did take us out again. Just wasn't ready to go. We did have a really nice push down into this area as well. This is this morning, first thing in the morning around 7 a.m. But that one actually died a bit of a death there as well, and it's continued to range thereon. So that was the result of the NZD-JPY. Cable, this is where we are at the moment. So we couldn't be further away from that one triggering if we tried. It has actually come a little bit closer down here. But again, we're not leaving this one in our portfolios, guys. The book needs to be cleared. So we're going to remove cable as well. And then GA finally. Well, I'll come on to UK Brent in a moment. But GA out of the FX positions. I'm kind of on the fence about our opportunity in the GA. It's got huge commercial short interest above price action at the moment. Okay, let's check out the daily again just to refresh our minds. That is where the daily is currently trading. Okay, huge commercial short interest up here. Big inverted hammer candle, which is starting to form here. If you are a candlestick pattern trader, this is actually quite a bearish pattern. When we get the opposites either side of each other like this, when we get a hammer and then an inverted hammer. I don't trade that candlestick pattern myself, so whatever. But if you do, that is generally, what it's indicating, as long as it closes here or anywhere below ultimately. I still like the GA short, especially from these highs. It makes perfect sense. I'm just, is it going to get down to 2087 before the close of play tomorrow? That is the question. And if not, is there the opportunity that we can manipulate our pending and bring it up a little bit, perhaps to here? Ultimately, to have the same trade idea would almost work, actually. Almost, wouldn't it? So that would be the TP there. This would be the stop loss at about here. Maybe a little bit lower, that 50% point. Yeah, probably about 209.79. And that's going to yield a 1 to 2.46. Is it worth having it in there? Do we think the GA from Big Liquidity is going to be trading back down to 209.28 this time of the week? I think, we've got a great success rate. I mean, absolutely superb success rate. If the market hits liquidity first, there is only one time where this particular trade idea has failed in the last trading week. Only once. Every other time it's hit liquidity and come back down, it's been a success. So those are pretty decent odds. I'm really on the fence with it. I think my hesitation comes from the market, the broad market inconsistency, really. And again, you would have heard me use this term a lot over the last couple of weeks. The lack of conviction, the lack of follow through from our trading assets. And this is as a result of the fear and uncertainty surrounding the markets at the moment. So I want to take it. It meets the criteria. It follows the rules. It follows a plan. It has the plan is there. I'm just a little bit hesitant about it. So I think what I'm going to do is I'm actually going to bring my risk down on this GA. Look, we've got a 1 to 2.46, so we're still going to be looking at a decent return. But I think I'm going to bring my risk down to 0.2 and not have the 0.25 maximum exposure allowance on this one. Okay, so I just want to make that abundantly clear. If you do want to take this one instead of the one that's down below, in the attempt of trying to suck in an extra winning trade before the weekend, then this is a 0.2% exposed trade. Okay. That is anchored. I don't want that anchored. Actually, it doesn't make any difference, to be honest. Oh, no. There we go. There we go. Yeah. Okay. So that's going to be the GA. That's going to be the new GA short. All right. So let's get that out to you guys. There you go. Now, in terms of building out more of a book, I do want to get a few more positions up on the board here. Remember, this is the last trading week of Q2. Obviously, Q2 finishes on Monday, but I don't trade any FX or alt asset classes then anyway. I only focus on the European and the US indices on a Monday morning and afternoon. Monday morning's rare if I trade the European indices anyway, because of the fact I'm doing the market report for you guys. But this is what I'm thinking. Build out the book for today. Get a few of those orders in the bag, hopefully by close of play tomorrow. And then we can move on into the weekend as we usually do, leaving our order books and our portfolios nice and clear, ready for a fresh week ahead and the beginning of Q3. And my birthday. Right, so let's go down, start from the bottom of the list yet again. Okay, so the USD yen first and foremost. Let's have a look here. That is actually really nice, and it's a bit of a shame that whilst we've been chin wagging, the market is contracting from the CDGO data release that came out a moment ago. In terms of US data, we don't have anything else now for today, and the next point of contact for econ is tomorrow at the same time. So we have a full 24-hour window before the highlight econ data release of the week comes out, which is core PCE. Now, it is a monthly figure, but make no mistake, it can cause volatility spikes if the market is surprised. Okay, so we need to consider that. 24 hours is our window of completion for anything that we take in the US dollar today. So what I'm thinking anyway, we've got a break, close and retest going on here at the USD yen. We've got the main point of inflection beginning from the left-hand side. We can see that there is commercial buying interest here because of the fact the market has come down to this point, exchanged hands, and then traded right the way up here to 145.90. We've come all the way down again. We hit the next point, rebound, but the shorts win this time around, and then we've come back for the retest. I am thinking, and this is probably one that you guys are going to have to consider punching the numbers in for soon, taking a short below this breaker structure point, aiming for the major one down below, and then taking the second half of this trading margin as our trade for the day in the USD yen. So if we go down to the 1 minute time frame, this is actually quite nice. We can fine tune this a little bit more. I think that one there would probably be more ideal because of the fact we have 1, 2, rebound, and the break close retest before the continuation. This is a TRF, which is situated right there. Maybe you can have your entry there. Let's try and work out whether or not the TRF promotes a positive risk reward yield for this opportunity. So if I have my stop loss about there, that's going to be a 1 to 1.85. If I sack the TRF off completely and just run with the breaker structure, have my trade up there, then that's going to be a 1 to 2.34. Obviously, this is the more ideal situation. The major point of inflection in this run, well, there isn't one, is there? To be honest, these are all minor and micro points of inflection in comparison to naturally the big one above and the big one down below. Yeah, it's kind of neither here nor there, is it? The margin at the top here is an interesting one as well. I mean, if the market comes back up here, is there the opportunity for us to get in even earlier to clear the entirety of this trading margin down before tomorrow? That could be a possibility. Looking at where the price line is at the moment, that looks like quite a decent breaker structure level. Let me just copy and paste this, bring that up to there. So we've had a couple of lows here, haven't we? And then we've had obviously the rebound and the retest before the continuation lower. The problem is though, if we have the trade idea up there, that is still going to be a very loose stop loss in order to beat the highs, which means we're going to have the stop loss at the 50% point between those two margins, significantly increasing the risk reward yield at 1 to 3.46, but now increasing the inherent risk of the trade being stopped out. Why? Because we've actually had just a recent couple of stabs at liquidity after coming down to this level here, which we would be completely unprotected by with having the stop loss in the middle at 144.39. So based on the risk profile and the technical breakdown of this one, I would stick with my first shout at having a 1 to 2.4 trade idea down at the bottom. I think if we can clear out especially this low and these two highs here, we've got a pretty decent opportunity to get the market going back down to 143.79, which is why that is the USD yen short for us. If you disagree, that's absolutely fine. But that's what I'm going to do. So USD yen short. Right, let's move on. Let's have a look at the USD CAD because this has also had quite the move. So 15-minute time frame, really nice big move down. Previous lows have been achieved. We've actually smashed through the previous lows with the recent data. But where next? I'm thinking about some really short-term trades here. So that low has to be taken into consideration. Huge point of inflection, big V reversal. We've come down, consolidation and rebound upon this level here at the moment, right? So we can see the market's come down, big institutional candles. We can see that the structure here has changed. Big institutional move into 136.80, followed up by consolidation, which means orders filling into the market. We're having a lot of fulfillment. Then, once the orders are filled, the market's ready to move on. We get the break of the structure, which is happening at the moment. What we really need now is a retest continuation. So, retest continuation, and then where's that going to take us? Let's go back in time. We can source some areas. So I think the break of structure following the retest would arguably need to be about there. That would be the break of structure point following the retest. The target profit, so long as that is broken, I believe should be about there. Now I'm going to actually increase the width from this point of liquidity because it is a bigger one. It needs to be more significant down there. So then we're looking to trade the margin between around 136.71 and down below at 136.54. So what we're going to do here, line up the trade, make sure we've got a positive risk reward yield. Naturally, we want to have a nice one. 1 to 3.2 is too aggressive. We don't want that. We run the risk of being stopped. What we're going to be aiming for is a little bit higher up here. I'm actually going to aim for a 1 to 2.13. So very, very modest. Very, very modest indeed. But I want to have more protection. I want to have the breaker structure and at least half of the liquidity point in there. Now, why does that matter? It actually matters because of this little low here. Arguably the one next to it as well. But this little low here comes right down to the bottom and then shoots right back up to the top again, which means there is money in the market at around that 136.78 area, or naturally just a bit below it. If the market does decide to get the breakout down here and then come back up for a test, it accounts for any potential wick throughs that are going to happen as a result of breaking through our breaker structure level in here. So that, to me, makes sense with added protection. So that's going to be the USD CAD opportunity there as well. Copy and sent straight out to you. There you go. All right, let's move on. Next up, we had a look at cable, didn't we? We had a position in the market. It didn't come anywhere near triggering, but we have had one hell of a move in the opposite direction so far. Now, we've already got 2 shorts in the US dollar, so it actually would be nice to go short cable because we want to have something that's going to be on the short side, right? Or on the long side. Sorry, on the long side. We've got 2 shorts in dollar. We want to be buying dollar in some other cross somewhere. So I'm thinking cable at the moment. Really nice structural floor in there, right? Looks like it could turn into a bit of a head and shoulders, possibly 15-minute time frame. It's probably not got much clarity whatsoever, to be honest, but worth a little shout out. We've got a point of liquidity in there as well, right? This is quite a nice one. Big point of inflection on this 15-minute channel. We've got a nice break, close, and retest of it there as well. Makes perfect sense. Median, we have an inflection point as well. This is where the retest continues, breaks the retest high, and then continues on up to its, obviously, its current high. Now, I'm thinking, if we look at the daily time frame, we should see, yeah. So, high, low, consolidation, lows, lots of consolidation, high, all the way through there at about where the price line is currently, but the market has actually risen just a little bit past that. So if I then drag a zone across to the left, across to the right, beg your pardon, and we have something like that, not as the main point of inflection, but as a point of interest for commercial institutions, right? We go back down to the 15-minute time frame. This is exactly where we started to struggle. So now we know that there's actually quite an important level above us. The chances of an increased level of short liquidity is probably in and amongst these areas in here because we've seen the reaction from previous data. So then a short, but only a small one, away from this level as the market contracts and comes down to retest the major point of liquidity here in this 15-minute channel, by the way. The major, take again that with a pinch of salt, but it is the biggest price action pullback we had right from down at the lows at 133.80. So the market traveled right from the low all the way up, had a bit of a downward period, and then continued to the big liquidity point. So it makes sense for the market to have a bit of profit taken and rebalancing it around this area, which we can also look to take a profit from. So we have the breaker structure at 136.90. We have the target profit down at 136.52. Followed up with a nice stop loss. Whoopsie. A nice stop loss, which is going to be a decent margin above that area there. So we will be looking at around a 1 to 2.26. And that, ladies and gents, is what I'll be looking at for cable in the short term as well. I'm actually going to bring that down to a 1 to 2.2. But I think by the time the market breaks down here, if it does, we're probably going to be set for that short. So that's going to be the offset for USD CAD and USD Yen. I'm not going to do anything else on that front now. Right, so we got 1, 2, 3. Let's get something. We haven't traded much Aussie Prime stuff this week, so I would like to see if Aussie CAD is available to us, or we don't have any NZD, so I'm going to take a look at that one as well. I'm not too fussed about the euro, not necessarily, not when we've got $3 in. Oh, let's have a look at the USD, just in case. No. Euro NZD. Oh, we got such a nice trade recently. I don't want to go handing back any profits in that one, so I'm going to leave that alone as well. Right, let's move on. Let's have a look at Aussie NZD. Now, this one hasn't been looking nice as of late. It's still looking pretty choppy, quite frankly, isn't it? Still looking quite choppy. No, I can't get a line on anything like that. Let's have a look at Aussie Yen. Could we work something out in this channel here? That's what I'm thinking. Very, very loose channel. Very loose. So let's say like that, for example, is there. That's the high. That's the current 15-minute channel that we're trading in. Let's get a bit of context up on the higher time frame. Let's go daily. Okay, daily head and shoulders. So we've got an inverted head and shoulders there. It's a great turning signal. We haven't really achieved much yet. I mean, this is not looking great. This is not looking great. I'm not entirely sure if I'm trying to find an opportunity in the Aussie yen when I should really be simply moving on. That's a big ceiling there, isn't it? And we got the move back up to those highs after we get the breakout. But we've got a lot of noise in between those 2 points as well. No, I'm going to scrap the Aussie yen. Don't like it. Let's move on. Aussie CAD. A lot of inconsistency in here at the moment. A lot of mixed sentiment. Let's have a look at the daily quickly and get some context. So price is actually trading currently at a nice intermittent ceiling. It's not the ceiling, but it is a ceiling. Let's have a look at the 15 again. If we looked for a break of structure point about there, well, no, that is the break of structure point there, isn't it? So that is it there. And then we've got the low, which is there, which is certainly where we want to be taking it to. That just looks like too small of a margin to me. So we've got that area in there as well. That stands out to me. It's quite a big one. Let me color this one short for red. Red for short, even. Entry, target, stop loss. So unscrunch this. Yeah. I want to get something more aggressive on this. Clutching, yeah. I don't know. I don't know really. I think I was clutching on the last one. I'm not entirely sure about this. That's why I've gone quiet, because I'm actually concentrating. Every time we've come up to here, let's think about this for a moment. We've come up, we've come back down. We've come up, down, up, down, up, down, up, down. We failed at this attempt. Now, these two lows only represent one attempt. Okay, this is only one failed attempt because we didn't come back up to the high before getting down there again. So that's only one. So from a win-loss ratio point of view, we currently have two losses, which is that low and that low there, and these two series of lows there. So we've got two losses versus 1, 2, 3, 4, 5, 6, 7 wins. I don't know. I mean, I don't know about you, but that's a strong win-loss ratio. I like those odds. Now, if I can get in on this way up at the highs there for a 1 to 2.9. No, sorry, no, it won't be a 2.9. Sorry, it won't be. So if I can get way up at the highs there and have my stop loss at a 1 to 2.3 risk yield, that is going to account for any potential wick throughs at the very, very top as well, which have been the most recent losses. Or no, it hasn't. It's not that. They probably weren't even losses. All right, look, I'm gonna leave it with you. That's going in my order book. I like that. I don't think that is clunching. I think it's a good trade. We're certainly trading away from a level that I think is going to be filling up with bearish liquidity. Is it going to get down at 89 before the close of play tomorrow? I don't know, but I think it's going to do it at some point, and I do want to be there when it does. So I'm going to take a short in that Aussie CAD as well. Doubling up exposure in Canadian dollar at the moment, obviously with the USD CAD, but I think that makes sense. I mean, even if we look at the USD CAD and look at where that's trading at the moment, I mean, this one's coming down to some pretty big levels soon, which means the dollar's going to have to rally back, which means the Canadian dollar's going to have to be getting a slap around at some point. So, yeah. I'm gonna go for that one. Right. Yeah, I'm gonna leave that with you guys. You know, as always, you have to do your own due diligence. You have to do your own work as well. See if it coincides with what you're seeing in the market. But it is going in mine. I am taking it. So that's going to be that one, 0.25%. Right. What time are we at, team? 1 minute past 2. Let's move on then. Metals. Gold. We haven't done a damn thing with gold this week so far. Not a damn thing. Real shame. So much mixed sentiment and volatility going on in this at the moment. As you can appreciate, I mean, it's been a very turbulent time, geopolitically and economically speaking, and politically as well. It's been a very difficult time, and gold is getting the brunt of it, you know. Gold has come down to big liquidity down here. We are forming a 15-minute channel, which is worth a little notable call out. It's actually quite a nice little one, this one. I think so long as we can get a buy-in from a potential point of liquidity at the same time, that should be quite nice. I don't want to see it break the lows. That would be a bit of a shame if it did break out at the low of the liquidity point there. Beg your pardon, the channel. So, can we get ourselves an entry on this? That is the thing. Right, let's study this little level here for a moment for a break of structure point. Rebound. Retest 1, retest 2, retest 3, retest 4. Fake out, coils itself around. We get the final breakout, we get the retest, we get the continuation. I think that's pretty good. I do. These are retests also of the median of the trend. So they do not work the same as points of liquidity. They are points of interest. Money hits the market in the same fashion as when they are a pocket of money there, a pocket of liquidity. But it's not exactly the same, because if you look, it goes up in an ascending direction, right? So what we can say to ourselves comfortably then, confidently, is that if the market continues to trade within this, actually I think it's breaking through now, isn't it? Don't know, it depends if we move this down, I suppose. Start it off from the very beginning of it there, but then it messes up the middle one. I don't know. Maybe I'm clutching at gold. I wanted to get something in gold this week, but if it ain't there, it ain't there, is it? So maybe we take a back seat in gold this week and we just call it what it is. Indecision week for gold, and then we can focus on nailing it next week. Really nice point of liquidity in here. This makes really, really nice sense, to be honest. If we can get the market coming back down to around 33.08, it might be a really solid opportunity to go long from 33.08 back up to the highs where we've just come away from, as a bit of a risk opportunity there. But again, I don't think that's for today. That's the thing. I don't think gold's going to have that today. So I think we're just going to have to sit gold out for the time being, team. Silver, done so much better than gold. So much better. Really nice big sweeping moves. Lots of conviction behind them as well. Yeah, it's just a world apart, really. World away from what gold's doing at the moment. In terms of trading it right now, though, it's no easier. It's no simpler. I think if we look at the ceiling there, for example, well, actually, we can completely discount that. Let's bring this up a little bit. Put that one there instead. Increase the width. So that's where your entry would be. You have a TRF, obviously, which is going to be situated about there, which is right in the way of an entry. And then you have the void from price at around 36.54 up to the high. Now, that's what you would be aiming for. But again, you're going to have to be waiting around a while, aren't you? So this here, that is what you'll be looking at clearing. That level there. And then from that level there, you'll have to look at the high. Now, you guys are going to have to watch your spreads on silver. Now, generally speaking, spreads are really, really good. But some brokers, they can be a bit fickle when it comes to silver instead of gold. They're biased. So, I think a trade idea in silver long would be okay. Looking target 36.81. Stop loss at the 50% point in there is going to yield a 1 to 4. That's too much. That's crazy. So I think of bringing this all the way down to here for a 1 to 2.2. Again, I know it feels like you're getting wounded not having a 1 to 4, but we are about consistency and reliability. Okay, and even though it would be absolutely brilliant to get a 1 to 4, I'm going to be much happier getting many 1 to 2.2s. So I think if we can get the stop loss down there to account for this low, which raises some alarm bells to me, we can get the stop below there, account for this area, account for that area, and then get stuck into the market up at 36.55 and go long from there. So that's what I'm going to do. So that is the silver long. Copy and paste. There you go, team. Right, so we've got silver, we've got a long, we've got Aussie CAD, we've got cable, we've got USD CAD, we've got USD yen. We've got quite a lot going on here at the moment. So let's get up to the energy markets. Let's check our UK Brent long, and then we're going to get hammering through the US indices. We're currently at 7 minutes past 2, so we're doing okay. We're doing all right. Now, in terms of the UK Brent long, I did mention this in the general chat as well. At the moment, oil is exhausted. It's been thrown around like a rag doll recently as a result of the Iran, Israel, Middle Eastern tensions. Also, naturally, with the US dropping bombs on Iran. It's incredibly affected by all of it. At the moment, we haven't seen much of anything. It's, from the initial geopolitical news, it has essentially been in rest state, in liquidity down here, which means orders are accumulating, cash is accumulating in the market between, let's say, 67 and 68.50. Right, so our anticipation, our expectation for this one is to see the sweep. Okay, and what I mean by the sweep is the market has a big sell-off, it comes down in the sweeping motion, and then at the back of it, we get a lot of positive imbalance of price taking place with the momentum changing and ultimately going into a buy. So I think we're going to remove this. This has been in my trading account for ages now. We're going to remove this Brent long because it's not going to happen yet. But we're not going to remove it completely. What we're going to do is we're actually going to edit the order, and we're going to look at buying in above this area in here, with a target profit up at that 70.30 area, with the anticipation that positive imbalance of price is going to be confirmed soon enough, and we will finally be able to get on our way. Now, the stop loss for this one is going to be where the price line is at the moment, that 50% point, and that's between the breaker structure and the liquidity low. So it's quite an aggressive trade, this one, but I do think after a week-long accumulation distribution phase of money down here, we are probably due the big rally, the big push up to that 70.30 level. So I'm going to take a picture of that one and send it on out. There you go, team. Right, next up, let's have a look here at US indices, starting off with the Dow Jones, moving down from there. Like I said, yesterday was a pretty rough day. Took a loss in the Nas and the Dow Jones. I think it was only the day before that on the Tuesday, when we incurred like 3 losses in the afternoon as well. So US indices have been struggling, this week. Not in general. I'm sure there's lots of people out there who have done extremely well on them, but for myself, I have been struggling this week. The US indices, I'm just struggling to get a line on them. Now, today, ultimately, guys, I'm not going to change my tune at all from yesterday's analysis. Okay, we've got the big liquidity point down here. This is the top, the ceiling of that big liquidity point. We can see the market yesterday had a beautiful big price action pullback. Imagine the money that it was collecting down here. You imagine you have short orders and long orders in the market all in amongst here. But if you think about how many orders for longs are triggering along the way, all the way down here, and as a result, when we hit this area in here, the market has a really big knee-jerk reaction. Now, I want to say that term again, the knee-jerk reaction, which is when the market hits a low or a high and has a big explosive move out of the other side. That is the prime real estate for commercial institutions who are unloading assets in the market, okay, in real time. So when we see something like this, it means that there is indeed a lot of money in whatever respective area it is that we're looking at. Now, looking at this US 30 Dow Jones for today, we're going to work with the exact same margins as we did yesterday, looking for trading opportunities between ultimately here and here. I gave you some broad stroke breaker structure elements. I used them myself yesterday. They failed. They worked as well in some of the trades if I was a little bit more patient, I suppose, in the afternoon. But, ultimately, these are our 2 trading margins, okay, between here and here. If you go down to your 1 minute time frame to get a little bit of a better view of what's going on down here, you could probably say to yourself, okay, today we've had lots of lows at around this area in here. If I drag that one right the way across, we've actually, unfortunately, we've got these lows in here, but we've skipped out these ones. If I bring that up just a touch to there, then we've actually got probably quite a decent little trading margin for ourselves sat between this level, that level in there. And that's going to yield us around, what's the stop loss? About 16 pips. US 30 Dow Jones for me, it's probably about 3 on the spread, sometimes even less. So, that's not too bad at all. That's not too bad at all. That's at the market open as well. So I think that's quite a decent little trade in there for, potential for the Dow Jones. The short on the other side, the breaker structure element is going to be, I would say, approximately here. And that is around that 43.11.5 level. And the idea there is then to take the short via the breaker structure, but only once the market has achieved the high, which is absolutely mandatory. It is non-negotiable. The market must come up to this area first in conjunction with the previous highs, which is where we know the money is, and then break down below the structural point, and then we can take the short down there as well. If the market breaks out, gets a break, close, and a retest, remember, break, close, and a retest above the high. We do not want to see any breakouts because there'll be fake outs. So we're looking for the breakout, the close above, the retest of, and the continue. And then you might be able to find yourself in a trade idea between these 2 points or these 2 points as well. Okay, so that's the US 30 Dow Jones. There you go. Nas 100 this afternoon. Let's go to the 15-minute time frame here. Just grab a bit of context. Okay, so we're coming back down. Nice retest going on at the moment at the point of inflection. That's in there. Below that point, the next major area, I wouldn't be going down for the extreme low. I'd actually be aiming for that ceiling, that temporary ceiling that we had, the top of the wedge. So we did have a little bit of a wedge in there, okay, before we got the breakout. I think clearing these margins is a really nice idea. Really, really nice idea, guys. So looking at this one, I would say that the breaker structure for the entry to this trade should be at approximately there, right? And then you'll be looking to clear this margin as your short trade in the Nas 100 this afternoon. As for the long though, okay, pay attention now. As for the long, there isn't one. I don't want to take any longs in the NAS 100 today. So I'm going to be short, Mr. Short only in the NAS. Problem is, we've got this area in here, and we've got this area up at the highs. Now you may be thinking to yourself, hang on a minute, that margin looks quite similar to the US 30 Dow Jones. The problem is, that's the trading margin and not the trading between the breaker structure and the target profit. Because if we actually look at that there as well, which is the little retest that we had, and this big candlestick up here, then the trading margin becomes a single 1 minute candle kind of thing, and with spreads involved as well, it becomes a little bit too tricky. So I don't want to be going and messing around with anything like that, because the risk yield on it will be crap. So we're going to leave the NAS 100 longs out, and we're just going to focus on that short. The NAS 100 short today, if it works, will be really, really nice. So that's going to be that one. And then with the Standard & Poor's. Standard & Poor's at the moment. So we're not going to be able to take any shorts. Way too much noise here. Way too much noise. But we do have a long. So almost the opposite of the NAS 100. That's the point at the lows. This is the point at the highs. We've got a really nice trading margin in there. I'd say better than the NAS 100s. The breaker structure for this one for the long is going to be here. That's going to be your BOS, and then you'll be looking to take the margin between there, target at the high, stop loss down there at the low, and you're looking at around a 1 to 2.2. Okay, so ultimately looking to clear the same kind of tactic as the commercial banks have been doing prior to us getting involved. The professional traders, commercial traders, not just banks, commercial traders. All right, so I'm going to take that one, copy, send it straight out to you guys in the chat. I will also, of course, make a record of all these positions once I fired them out into my own terminal, and then send them out to you guys as well inside the UTCF Fund Alerts channel. So stay tuned for that one. Now, please have a think. Are there any questions? Do you have a good, clear understanding of what the plan is for most of these orders this afternoon? It is 17 minutes past 2. You guys have got you guys have got 13 minutes to go before the US Open this afternoon. Time is coming up. So any questions at all, team? No? Good. Yep. Good. No problem at all. Look, if you got questions, if there's questions anyway, please fire them out. Okay, in the general chat, in the Traders Lounge, you fire the questions out wherever. Okay, and you will get a response in good time. So I'm going to wrap things up there. I hope you guys have really appreciated and enjoyed the session this afternoon. Have a fantastic trading session as well. Good luck to you all, and I look forward to catching up with you later this afternoon to see how it all goes. So I'll see you then. Cheers, guys. Bye-bye.